My dad walks into my room. It's around Christmas, and he just says, I was home for the holidays. He says, wasting your talent at that startup you're working at. And it's time for you to do your own thing. My mom's a rock star. I think my dad gets a lot more of the publicity, but my mom's probably the better entrepreneur, in my opinion. She's started multiple businesses. Right now, she runs a solar installation company. I sometimes read comments on podcasts like Nepo baby, and I'm like, yeah, I am a Nepo baby, and it's no problem. The greatest Nepo baby of all time is Buffett. Not that his dad was a stockbroker, but more importantly, his dad was a member of Congress, which is insane. Intrinsic value has shifted from tangible assets to intangible assets. So more goodwill, more network effects, stuff like that. So things that you can't really see on the balance sheet give a company value because it gives it survivability. So like Google, Berkshire, it's a huge thing. So giants don't move fast. They don't run marathons, they walk. For them, it's a lot more about surviving and compounding at any rate versus a very high rate.
In 2008, a 12-year-old girl sat across the table from Warren Buffett. At the time, she didn't fully understand the significance of the moment. But she was growing up in a world where investing wasn't an abstract concept. It was dinner table conversation. Her father, Monsoon Pabrai, the legendary value investor, would turn everyday moments into business case studies, calculating restaurant economics while standing in a line at Chipotle. But perhaps the biggest influence in her life wasn't an investor, it was her mother, a three-time entrepreneur who once stepped away from her career for 4 years to help Monsoon build discipline, the kind of discipline required to build something of your own. Fast forward to age 25. Most people are just figuring out their careers. Monsoon started an investment fund, not with institutional capital, but the way many great funds begin: friends, families, and a belief that long term thinking still wins. Along the way, she found herself learning from some of the most legendary investors in history: Warren Buffett, Charlie Munger, Lilu, and others in the value investing world. Today, Monsoon runs Drew Investments and represents a new generation of investors, one thinking about value not just through balance sheets, but through intangible assets, networks, and long term compounding. This is a conversation about discipline, independence, and what it really takes to build a career in investing. We kick this conversation off asking her, is she an introvert or an extrovert?
I've always enjoyed being around people. When I hang out with people that I love, that I respect or enjoy time with, I come back more energized. With age, maybe the energy goes down. Not that I'm too old, but I'm definitely more extroverted. That's a really fun question and topic because I was at a lecture where this other fund manager was talking about how analyst roles at hedge funds are designed for introverts. And then as you stay there 5, 10, 15, 20 years, you need to be pretty extroverted. And that he was proposing that they should have extrovert analysts do more extroverted work, speak to management teams from the beginning, etc. That was also part of the reason why I started the fund because I didn't like sitting in a shoebox just looking at my screen.
You're not a desktop ninja. You're somebody who is out and about with people.
For me, the discipline comes from sitting at home and going over the information. For example, I come to India at least once a year. I'm trying to increase it to 2 or 3. And so I'll meet management teams for 3 or 4 weeks. That's where I do all my fun research and I quiz them and I ask my questions. But then I do have to come home and look at all my notes and figure out what the heck is going on and make sense of it. So I'm not going to meet a management team and then buy the stock the next day. I'm going to do the analysis and sit at home, but I definitely enjoy being out in the field more.
So, you grew up in a household where investing in business was a central theme. How do you describe your childhood?
Oh, yeah. So I'd say the first thing was I would say we were comfortable. Like we had tutors if I didn't have good grades, whatnot. It was, I would say, very entrepreneurial focused. So it wasn't so much about how to pick the next great stock because my mom's also an entrepreneur. So really at home was more what makes a business great. So if we went to a restaurant, like if we went to Chipotle sometimes has really long lines. So my dad would just be like, do the math on how many seats are available to sit in, how fast people are getting up, because Chipotle you sit for like maybe 10 minutes, and how quickly the staff is moving through orders, and just like what that means in terms of like dollar per, like maybe if people are spending $25 on a order for two people, how much they're making in an hour or something. So that kind of math was always, I'd say that started probably age 7 or 8. So I was just used to it. That was always, it was fun. It just made it more exciting to stand in line and kind of look at how different it would be in like our favorite Korean restaurant versus an Indian restaurant versus Chipotle or like a McDonald's. And then I think the last one would be grounding. So we were Kirkland Costco kids. Almost everything in our house came from Costco. They were cost conscious immigrant parents, and it was very education forward. So that's how I would describe my childhood. It was probably a similar childhood to a lot of immigrants of Asian parents to the US who came in the 80s and 90s around that time. And the neighborhood I grew up in was a lot like that too.
How did you get groomed into value investing?
I wouldn't say groomed. I would say it was just around me all the time at a young age. And my parents were both hands on parents. If my dad felt comfortable taking me or my sister or both of us to any kind of event, he'd ask the host if can I bring my 16-year-old or 17-year-old. They'd usually say yes. So I was exposed, like I got to meet Lilu when I was young. The coolest for sure was meeting Buffett when I was 12 for that lunch in New York. Even then, it didn't click for me what was really going on. Grooming into a value investor really took place just around the entrepreneurship thing of the one thing I was probably groomed into was that entrepreneurship and the independence to do what you want to do every day is a very cool high calling. You get free time if you want it. You can go crazy with work if you want it. And I saw my parents working 7 days a week, but I still got picked up from school at 3 or 4 o'clock. And so I saw the freedom it gave them to do what they wanted to do.
So, at what point and how did you break it to your parents that you want to be in an value investor?
I live in the easiest family to break that news. If I wanted to start a business at any time, I could. If I wanted to, at 16, set up some kind of Etsy shop and sell stuff, I didn't do that. But that would have never been discouraged. That was the kind of stuff that would have been encouraged. Like any lemonade stand type business, they said, you should do it. They really wanted that. So what had happened was I was working at a hedge fund out of college. Then I had the startup itch and I moved to a startup called Coral Labs. I still had my passion for investing. So I basically, just like a silly goose, I set up a management company, which is very cheap and easy to do in most states in the US. And then I created a corporate brokerage account. And I told myself, just see if you can manage your own money at like 23. I was working a full-time job, managing it on the side. At the same time, I'm a big lover of the beauty industry, and I was learning a lot about that at the startup I was working at. And my best friend, one of them, she's a formulator. Back then was making like duping skincare products, but now she does pre-formulation in oncology, so she could make anything. I think at that time we had seen Drunk Elephant, one brand, sell for 700 million to Shiseido, and then Tatcha, another brand I like a lot, sold for 500 million to Unilever, and they have 20 creams. That's it. And just these huge brands. I was like, oh, we can build a brand. Three of my friends and I started that, oh my gosh, 2019, 2020, through the pandemic. And while I was working at that job, and then I was also managing a somewhat professional portfolio in the management company, I was 25. And my dad walks into my room. It's around Christmas. And he just says, I was home for the holidays. He says, wasting your talent at that startup you're working at. And it's time for you to do your own thing. And he's like, you can do a split. You already started the hedge fund. Why don't you try that? Or you could do this really cool hair care company with your friends. So I thought, okay, yeah, not a bad idea. And then my dad later told me that his dad had told him the exact same thing at 25. So I think it was just a entrepreneurship forward looking family. And you get to take a lot more risk at 25 than you do at 35 or 45. And especially being a woman, if I had kids and I was trying to start a fund, it would be harder. I don't have kids, so I don't know yet, but that's an assumption that I think most young ladies can make if they're thinking rationally. Told my girlfriends, I said, I'm going to quit my job and I've saved enough where I can live at home and I can start running the brand company full time and do the hedge fund on the side. And two of the girls said, yeah, that sounds good. And the formulator, she said, no, we're all not quitting our jobs to do this. If you're going to quit your job, quit to only do the hedge fund, do the hair care company on the side. So I said, okay, that's fine, no problem. And so that's what I did. And I'm so glad I did. We've been running that hair care brand. We ran it 4 or 5 years. We sold it to a nice lady in Texas just because our careers started to become more demanding from all four of us. The hedge fund actually took off and people started investing money. It was more of a gentle push to just kind of start my own thing and not to just stay on a salary. That's probably very different of an experience for me than most of the kids I grew up with, where their parents aren't really pushing them to go start and try out their own thing.
You talked about women. Let's talk about your mother, a three-time entrepreneur who literally paused her career to enable you so that you get well educated. So, what's the story there?
My mom's a rock star. I think my dad gets a lot more of the publicity, but my mom's probably the better entrepreneur, in my opinion. She's started multiple businesses. Right now, she runs a solar installation company. So what she did was she noticed that I had terrible grades in 7th and 8th grade. And they don't really matter for college, right? Nobody looks at that. But 9th through 12th, they look at. And so she was nervous that she could tell I had very high retention. I could remember things from, I don't know, second, third grade that I'd learned in history class. I had excellent recall. I had high analytical skills, but I was just not applying myself in school. And what she saw was that I was really disorganized. My younger sister is like that, but I'm not. I'm a lot more lazy. I'm hanging out with the fun kids. So she basically told me, like, Monsoon, you're bright. You're not applying yourself. And I don't think you know how. So I can take over for the next 4 years and just be your secretary and make sure you get damn best grades you can. So the expectation was always A's, but if you did your best, it was okay. They weren't too crazy that way. I said, yeah. I said, that makes sense to me. I was like, I can tell I'm smart. I'm just getting a C in English. That doesn't make sense. The first semester was crazy. When she'd pick me up from school, she would say, you got a 92% on your math test. And then on the drive home, she dropped me home. She moved my computer to the living room. She would say, you're going to do your math homework first. You're going to do your English homework next. Then she'd feed me a snack. It was like I would call it like a military, like timed out programming. Then she slowly loosened the reins. So she was still tough freshman, sophomore, and then into 11th grade. Senior year, she didn't care because she knew grades were finalized. I had basically all A's. I had done really well on my SATs. I was a lot more excited about my extracurriculars than school. So I did debate. I did mock trial. I was on the Science Olympiad team. I had state rankings. I was having a lot of fun on the weekends competing, but I had to get good grades to get a good placement in college. So by senior year, we knew that my grades were fine. I had built the skills to become more disciplined. And I'm still so grateful that she did that for me. I always felt very guilty about that. But I did a podcast with another very kind woman, Julia. And she mentioned to me, which I agree with, Olympians, those teenage years are really important. And you see parents dedicating themselves all the time to like just superstars. So now, and I told my mom that, I like that view of it because we always felt a little bit bad about how aggressive she was. But in college, I partied, I had fun. And then she basically gave me the skills I needed to be disciplined in running my own business, to stay on top of my own schedule. I fit workouts basically every day, so I start the day in the right mood. I knock out easy tasks. I don't have an assistant, but now with all the AIs, I can keep track for myself. If anyone's listening to this who's a mom of a smart kid who's not applying themselves, I would call it a not traditional strategy, but it's probably something I will do when I have kids too, which is just tiger mom.
Your two anchor investors when you kicked off your fund at the age of 25. What did you pitch to them? How did they get convinced?
So one of them is my mom. So it's very easy convincing there. And the other one is like a auntie that I grew up with that I've known for a long time. So they really just took a chance on like woman to woman and just said, yeah, no problem. We'll seed and get it going. The quote is friends, families, and fools in the beginning. So anyone who's listening, who's thinking about starting a fund, like you're going to have to lean heavily on your friends and your family. And there were people who had found me on Twitter or whatnot, and they themselves said, I guess we're the fools. I said, don't call yourself that, but okay. Ladies were just people I've known for a long time and they get you started. For the most part, every single hedge fund in the US that's like $1 billion plus basically started the exact same way, 1, 2 million back in the day, friends and family, and then they proved it well, and then more people started coming in. It's a pretty standard way to start. The harder part about starting is that I've noticed is not getting anchored around a really big number. So sometimes people say, oh, we want to raise 100 million or 200 million. I'm like, okay, that's great, but you might be like 40 something when that happens, which is fine. You can totally do that and get started. But once you have kids and you have an expensive lifestyle, it's hard to take that leap. And then you will have to raise 200 something million to get started. So for me, I had two people willing to invest a small amount at an early stage when I could still live at home. So I took it. And 6 months after I started the fund, more checks started coming in. And every year that the fund has gone by, it's felt easier to raise with higher check sizes. It just scales on its own. And it's fun. I'd say the two anchor investors, what I told them was, I have had great personal returns on my end, and I'm going to try this out. And they really understood the being a young woman, starting before kids, entrepreneurship piece pretty well. All I told them was, the one thing I can promise is I'll always be honest. So I'm never going to show you a fake number or run away with your money. And when I talk to people who are interested in investing, that's the number one thing they're looking for, is that you're working with someone who has high integrity. I always report to them things I'm thinking about or things that are concerning to me. For example, the fund does not trade on options right now. The legal paperwork allows us to, but we don't. It's something that I hear a thesis from a different investor, and if about it, I might then let investors know in the letters, like, hey, we may actually change our mind on this options thing. If you have any opinions or concerns, let me know. But I'm just letting you know that I'm thinking about it. So I like to be straightforward with everybody. I like to be transparent. So that's what I said in the beginning. And the math I'd done was, with the money I'd saved from working at jobs for 4 years, I could basically run the fund for 5 years before I had to shut down and lose all my money. So what I told them was, I'm going to take a 5-year run. And if it fails, then I'll be 30 and I'll return your money and I'll probably apply to business school, restart. And if it works out, then that's even better. And around year 2, I had a male investor tell me, you're actually going to survive. And I was shocked. I was like, oh, you think I'm going to survive? And he said, no, I'm looking at the whole situation. You'll survive for a while. So I was like, okay, cool. Thanks. Surviving is one thing. High returns is the main goal. But what you really want as a new fund manager is people that won't leave quickly. So we've had basically no redemptions. We had one come in, but everyone else has stayed through and consistently tells me 5, 10, 20 years. And I said, that's no problem. You can leave when you want, but that's nice to hear.
In college, started with economics and then moved to political science. Why that shift?
I didn't know what I wanted to do. When I went to college, I'm trying to remember how I was thinking. So I had basically bought some stocks when I was 16, 17, like MasterCard, done nothing with it. Knew I was a little bit interested in business, probably more interested in law, but I thought like an economics undergrad would work well for going to law school. When I took my first couple econ classes, I'm very extroverted and the people mean a lot to me and can really affect my mood. It was a lot of business school students who were sharky in nature. I did not like their energy. I felt like they didn't have any of the Buffett or Munger values that I was raised with. I was like, what is this? So then I started taking computer science classes and I told my parents, and They said, oh, if you wanted to be an engineer, then you should have gone to Berkeley. It's going to be way too hard. And they were right. The CS classes kicked my ass, frankly. But I loved it. I loved one class. I liked data structures. And then I think it was probability theory or something. I loved probability theory. So I started taking more statistics classes. And then they were all getting a little bit hard. And I really prefer reading and writing more than math in college. In high school, I preferred math. But at the college level, I really preferred the long 34-page research papers over doing long proofs. So I just, at the end, pivoted to political science, worked towards a minor in statistics. My transcript looks crazy. It has 5, 6 econ classes, 5 CS classes, like 15 political science classes. I had the most fun in my poli-sci classes, and they were all focused on international relations. So like one of my favorite classes was on like US politics and Asian relations. And we went through every country, US, Singapore. US Singapore is the coolest. We did US India, US China. We did everything. And it was just a very cool way to see how exactly the world works. So I find it's funny. Those classes helped me understand more about like Taiwan, China policy and like the risk of investing in Taiwan than anything else could have. So I really enjoyed political science, and I like that lens of looking at the view. And one way it kind of relates to my investing today is I was at a Fund Columbia lecture, and Nick Sleep was talking, and I just asked him, your partnership was called Nomad Partnership, and he biked across China. He used to do all kinds of meetings in Malaysia, and you do 7, 10 meetings a day. I'm being dramatic, and do it for a week or two at a time, and just meeting after meeting. And he found some pretty cool gems outside the US, but his final 3 bets that made him all his money were Amazon, Costco, Berkshire. I asked him, I find incredible entrepreneurs in Asia. How come you ended up with these 3 American companies? And the right to private property in the US is the best. The regulation and all the issues that would come up in Asia, in different countries, depending on the rules, after businesses got to a certain size, kind of hurt them. If I didn't have my strong political science background, I would have understood that answer as well. But it's a very cool lens for, do you invest in this company in China? Do you invest in this company in India? What are the risks with US relations there, like being a US fund?
Is there something that people consistently get wrong when they hear your last name?
People just assume, daddy's money. And I think that's probably the case for anyone in my shoes, because I had interned at endowments in college and loved it and wanted to go into value investing full-time right out of college. So I knew then that if I'm going to enter the exact same field as my dad, I have to be ready for all the shitty things people might say, because I'm walking into the lion's den, basically. So it has never bothered me since I was 23. I sometimes read comments on podcasts like Nepo baby, and I'm like, yeah, I am a Nepo baby, and it's no problem. The greatest Nepo baby of all time is Buffett. Not that his dad was a stockbroker, but more importantly, his dad was a member of Congress, which is insane. It's totally fine. And I think I'll always acknowledge where I come from. I'm not going to hide it or run from it. And I'm more than anything really grateful that we are in the same field, that I get to see him at work events and at conferences. I try to stay more positive and grateful and just ignore the haters. And it's really been more helpful for me than harmful. I think people would not know who I am if I was not his kid. So I'm just, again, really grateful. And every single person that's invested in the fund recognized the last name before they wired money or talked to me. So I'm never going to pretend I'm different. Or I would never even learned about investing if it weren't for him. So I just am grateful, I acknowledge it, and I'm thankful.
Now you're 30, managing 25 million as a solo partner at Drew Investments. How does that make you feel?
It makes me feel like I'm on the right path. I'm also grateful. I'm thankful. It, again, would not be possible without him. I appreciate my freedom to set my day up how I want, because I'm value long only. I'm not on a screen 10 hours a day. I'm on a screen a couple hours a day. I'm thinking or reading otherwise. So I'm really grateful for the freedom I have to do what I want. I get to go to India. I can go to India for 6 months and just camp out, look at companies there. I can go to any country I want, whenever I want, set up my base and just work out of there. And I can do that anytime I want. I can also, in terms of dating, move to any city I want, whenever I want with my partner. So I just feel really grateful for the freedom that this career has given me, which is exactly what Munger talks about, that he was really looking for independence and financial freedom, which is exactly what it is.
You spend a lot of time among one of the most knowledgeable, well read people, Charlie Munger, Warren Buffett, Lee Lu, many more. Your father, Monish himself. Usually, when you're not the smartest in the room, how do you manage such environments?
I'm very quiet. I just listen. That's probably because I'm female, and probably because in that way I'm a little more shy before I speak. The most insane room I used to be in is in Omaha the night before the annual meeting. The Munger family has a dinner, and that's where there's Bill Gates and the BYD CEO, Wei Chuanfu, just billionaires everywhere. I'm really quiet there. But if I see someone I'm a deep admirer of and I see them standing alone, Bill Ackman was at one of these dinners. I just walked up to him and I said, "Hey, Bill, like I'm a kind of a big fan of what you've built. It's insane." And I said, "Oh, and I'm friends with Guy, and I know he was in your Harvard class." And he's looking at this like young Indian girl talking to him. He's like, "Oh, okay." No one's talking to him, so he has no problem talking with me. And his wife's there, and I'm chatting with her. And I try to be confident and talk about whatever I know about them. But if I don't feel confident, I'm just gonna stand by my dad while he speaks to whoever and just say hi, hello, whatever. I try to listen more than I talk, but if there is someone I know or I admire, then I'll go up to them and speak with them. Person I do say hi to is Ted Weschler, and he always jokes. He's, "I know your name because your first name is so easy to remember, and I know your dad's. I know your last name." And he's like, "How are you doing?" He's very sweet. He just says, "What's up?" and I chat with him, but that's really it. So I just listen more than I talk. But being in that room is not a networking session for me. That's just, again, me being there for my dad and proud of. It's like he got first place in the science fair. This is good for you. We're here to celebrate.
So, you talked about value investing, right? Principles of value investing haven't changed much in the last few centuries. If does a Gen Z look at value investing any different from a baby boomer?
The thing with value is, like, the way I see old school value is you pay less than intrinsic value. And intrinsic value used to be, and sometimes still is, like liquidation value or value of all the real assets or whatnot. What's happened in a lot of developed markets is things are pricey. And so intrinsic value has shifted from tangible assets to intangible assets. So more goodwill, more network effects, stuff like that. So things that you can't really see on the balance sheet give a company value because it gives it survivability. So like Google, Microsoft, things like this, like a traditional value investor would not like. But if you go and look at all the value investors who are in their 60s and 50s and you look at their top holdings, it's all tech. So they've adapted to this view on intangible assets, have an intrinsic value that you can add, and then have some protection of risk. You're not going to blow out all your money that maybe a growth investor may not have. But I value today is probably a little bit more growth oriented than it used to be. And I think millennial and newer age investors probably might get that better than the baby boomer. But the good thing is that the millennials are the analysts at the baby boomer fund. So they're letting them know what's going on. So I think maybe there's more of an emphasis on good businesses.
You have been groomed by Monish, Warren, Charlie Munger, Guy, Lilu. How are their personalities different? How are they different from each other? Given a number of them either invest together or invest in the same companies.
My dad, I would say, is, and it's because I'm his daughter, I'm so strict. I like to criticize him. So he's probably, of the names you listed, the most deep value and probably deep value leading. There might be one or two things that he picks that I would probably also pick. Probably not more than that. He ends up being right and I was wrong. So that's always fun. Buffett is the most interesting because he's had this 60, 70-year career. He's gone through the whole transformation. We have all the information on him. And different people probably invest like him at different points in time. What Buffett got right that nobody can copy is culture. He sees himself as a teacher. He's very hands off with all his portfolio companies, or that's what he says. That's what it seems to be. Because of Munger, switched more to quality. The most recent purchase at Berkshire was Google last year, which is just so funny. Scaling to their size is incredible. And using the float and doing it that way is something people have tried to copy and have done well or have not done well, but no one's at their level. Munger's probably my main source of mental models, and he's probably my favorite on the list. It's hard not to just be a deep admirer of his because for him, it's not really about investing, it's about just being rational and thinking clearly. It's something that I really locked in on early because you could use it in any field. And it's fun when you go to the daily journal meetings when Munger used to be there. There were all these value investors, but there'd also be all these just Munger non-investing like mental model guys, and they were interesting. They were fun. Guy's probably the most patient. He might be too patient, and he'll hold a business. He won't touch it, and you can see that on his 13F. There's no change, and it's probably he's probably the best example of patience on there on that on that list of five. And then Lilu's just the most badass. To me, he's the biggest rock star. He's also been a real big cheerleader of mine, so I don't get to see him as much. I see him in Omaha. One year I'll be interning at an endowment. The next year I'll be an analyst at a hedge fund. Then 2, 3 years later, he's like, now you're running your own fund. Yeah. Every 2 years it'd be like an update, and he would just be like he'd know exactly what's going on. He'd be just really proud of it. Lilu also doesn't sell, but he also, frankly, has the cojones. So he kind of has more of a just like a much more long term outlook on how crazy the growth can get. And I would say he's really good at timing. Like on Mautai, I mean, he had looked at that for a long time and he bought it at the bottom and he sold it pretty close to the top. And then it went up more after that, but he still did really well. So to me, he's the rock star. I mean, he basically finished his JD MBA in 2, 3 years, 18 months without speaking English. You can't compete with that. It's just like these, sometimes we just get these absolute genius rock stars when every single Chinese person in the US knows who he is. He has the ability to see past 10 years, which I actually think no human is capable of except him in investing. I do not know what's going to happen in 10 years. I don't know what technologies are going to be here. When AI first came out, I would not have even guessed from my point of view the AI would be coding. And at the level AI has been growing, how quick it's growing, I can't. And the one thing I do know is it's worse yesterday than tomorrow, and that will always hold true. But the how quickly it moves, it's just like I can't just force myself to keep up with how quick it's changing for my investing. And now I just have a bunch of stuff running, and I go back and I read it, and I'm like, well, okay, good to know. I can synthesize way faster. And Guy wrote an article about how value investing is dead because of AI. And I agree with it in some ways, but I don't agree with it in other ways because you still have to be able to think for yourself. But it does a lot of the heavy lifting. You just have to spot check it. Yeah.
One of his other qualities, which is probably we don't speak about, is how good he's in convincing people, such as Munger and Buffett, to invest in BYD. Look at the first Chinese investment. What happened is that Lilu invested, or he was keen to invest, and then that followed for Berkshire Hathaway to make the
Yes.
first Chinese investment in BYD. He has amazing convincing power.
And that's actually a really fun thing that I talked to my dad about a few years ago is that you would expect people with high EQ who probably have low EQ to work on it. And my guess is someone like Lilu either was really good at both or he it just has both. But he's the type of person who, if he notices something he's not good at, he will probably work so hard to fix it. You find a lot of really intelligent people who don't make the small changes they need to improve their EQ, which helps for fundraising, which helps for business building, for entrepreneurship, for convincing people. It kind of blows my mind how many times I meet really smart people. They are smarter than me. Without a doubt, on paper, they can do math faster than me. They can figure out things faster than me, but lack all the EQ skills to convince someone to do it, to have faith in them. You're totally right. Lilu can do both really well. And I'm not sure if he taught the latter to himself or he just was born with both. But I remember talking to my dad about it, how bewildered he is by the number of incredibly bright people that we both meet who just won't do the most simple thing.
And for everyone who's listening, I will put the link as well. He gave a brilliant talk in one of the Ivy League schools a few years ago, which I listened to. Everybody should listen.
Is it the Lilu Columbia yelling at the students for not doing the math correctly?
Yeah, exactly.
I
Yes,
love
that
that one. That's Columbia.
people should read about him way more, maybe to the same level as the Warren Buffetts and Charlie Munger and the Monish Pabrai. As a young value investor, how do you see the performance of Berkshire Hathaway in the last few years?
It's not as good now as it was before, but this Google pick they made is correct. I also think people are really critical of Berkshire. It's a huge thing. So giants don't move fast. They don't run marathons, they walk. So I think for them, it's a lot more about surviving and compounding at any rate versus a very high rate. You're not going to hit like a 30-40% return at their size. There are funds and hedge funds who take leverage, who compound at really high rates, 70, 80%. But then they also have big down years. And that's just a different style of investing that Buffett and Berkshire and the culture would never be interested in. So I don't think we're going to see really high rates of growth, but we will see growth.
You are very pro Amex. So break that down.
The credit card industry is really cool. For Visa and MasterCard, every time you swipe your card, Visa and Amex get a certain percentage of that. So does Amex. The difference is Visa and MasterCard have Chase or the different banks that host them, and they're more security businesses with that. See them as just in charge of the black line on the back of the card. Amex is closed loop, so they own everything. They handle the risk, they handle the customer, the merchant, the data, everything. So the businesses are cool because so for Visa MasterCard, anytime a new customer comes on, it's technically 100% gross profit because they don't even pay for the card. The bank pays for the card and then they just take, money off the top. So it's like they're all toll bridges, but Amex is closed loop. So what's happened is Amex is always priced less than and considered not as high quality, but it actually technically would be higher quality. Sometimes on Reddit, I see people randomly getting their Amex cards closed for whatever reason, and that's just because they just don't want to assume the risk with anyone negative or bad. They're kind of just the best businesses because it's the same way the stock exchanges. They just take a piece of everything, and the thesis is even if they take a piece of everything, everything stays the same. They still are a good business. But because everyone is going to be spending more, wages are going up, they can expand to more countries, it's more revenue, it's more profit. Amex, I think, is the stronger business because when I had first studied them, 60% of their revenue goes towards card member benefits. So hotels, flights, miles, whatever it is. And it's now up to 72%, which is, and every year it goes up higher. And I'm like, wow, they're giving more back to their customers. So it's what Nick Sleep likes about Costco and Amazon, that the point is to pass on savings to the customer to retain them. So Amex does the same thing.
Let's shift gears to China. You have a view about BYD, unique, China risk. You've been a political science student yourself. Break that down as well.
BYD is a insane business. It's really Lilu's pick from I don't know how many years ago, many years ago. Berkshire ended up buying. My dad owned it for a bit there too. A lot of people have owned it. I'm very late to the game to be buying it now. But to be fair, when they owned it, I was in middle school or high school. So I've gave myself a pass. So it started as a battery company. It's now a little bit more like an EV company. The hardest part of running an EV business for like Tesla is controlling costs on the battery. So BYD has insane cost discipline. That's part of their culture because of Wang Chuanfu, and they're vertically integrated, but exceptionally. And the thesis is just that hopefully they continue to take share in Europe and other places. Anytime I talk to a Tesla stock owner, for some reason they're all around me. The smart ones will tell me the only businesses they're worried about are BYD.
India, a market that you and your father both are gun ho about. You have some great insights about the financial industry, real estate, the alcohol industry. Give us some nuggets.
You have incredible family businesses where they own 80% of the equity. And if they're not paying a dividend or paying themselves a salary, then you should be aware of fraud. That's one nugget. But like Oberoi Realty thinks in a 300-year view. It's the one that I've met that actually thinks that. And Vikas says, I'm thinking about how Oberoi will be around in 300 years for my great great grandkids to run the business. And that's how they view Indian businesses. And I'm like, oh, okay. You really don't know what can happen tomorrow. This is my thing with AI. It's just so crazy so quickly. Like the way we move faster every year through tech, people get more brilliant. So who knows what the world will look like. But India right now has incredible trends and tailwinds. We're seeing an increase in brokerage accounts. We're seeing an increase in equities trading in India. People traditionally used to do, gold fixed deposits and real estate. I mean, that's literally even now in the US with my Indian American friends, their parents pretty much feel most comfortable there. Maybe some equity. We're seeing more equity market participation. It's really hard for foreigners to invest in India. You basically have to be institutional. So maybe if they open that up, it might be more interesting. But it's also hard for Indians to invest outside of India. They can't really move too much money out. And that could be why you see rich valuation. So like an alcohol company in the US might trade at 25 times. The same one will trade 65 times in India. And it's like, why? I would beware of the rich valuations. And sometimes they grow and sometimes they don't. Sometimes I have a little bit more turnover there than I would prefer, but it's also just because the story kind of changes quickly.
On the finance side, why Edelweiss?
Yeah, so Edelweiss, you have an incredible, probably misunderstood entrepreneur, Rashesh Shah. His expertise, he knows this, really comes down to him going 0 to 1. So he can incubate and start a business, nurture it for a little bit of time. And I think Edelweiss's plan is basically to create value creation for the shareholders. Edelweiss name is taking a little bit of a hit in the market on quality, but it is still a good business. It's not a fraud. It's a legitimate business, at least from what I can see. And the plan is every 2 years that they launch one of their 7 or 8 businesses to go public. So they had listed Nuvama, which is their wealth asset management business. The next one is, or maybe already is, their alternatives. And then after that will probably be their mutual fund business. So there's a lot of value creation that will happen, which is why we own Edelweiss. In terms of the best long-term compounder in financials in India, I think it's Motilal Oswal. I consider them the Charles Schwab of India, just brokerage account focused. The one I'm thinking about, but I want to be at the correct price, which is fun to pitch, is Grow. Something like my dad would never touch that soon, but that's something I would be like, ooh, Grow. And I like Robinhood in the US. I don't own it. There's a price that I would own Robinhood at, and there's a price that I would own and Grow at. I'm just waiting for that price to come down. And that's because I see every single friend of mine with a Robinhood account. And the thesis there is I start with brokerage, and then you can bring people into cash management or other kind of businesses. And it's just like a good pipeline to bring people through.
What is your counterintuitive view about value investing?
I think that doing nothing is the hardest thing. Like doing the ability to do, and I think for people who are really intelligent, working hard and getting deliverables done is very important. So being basically distracting yourself enough to not trade every day is probably the hardest part. That you're supposed to actually not work to work.
3 books.
The one that just came out, and you don't have to buy the book to read it, but the 60 years of Buffett's letters, there's a big fat version that came out. I read the 50-year one years ago. I think the 60-year one would be really important for anyone who wants to start a fund or is, obsessed with investing. If you're trying to do retail or personal investing, you probably don't need to read the whole thing, but it's kind of a fun thing to have at home. Or Poor Charlie's Almanac, some kind of Bible equivalent of value investing. The one I really liked is What I Learned About Investing from Darwin by Pulak Prasad. So that's just a really cool book on, it's kind of like an Indian investing lens and just long-term survival and how it relates to markets. It's just like a cool thesis. And
Yeah.
then the last book has nothing to do with investing. It's just one of my favorite books of all time. So it's called In Cold Blood by Truman Capote. And I love journalism. I love investigative journalism. I love reading the Wall Street Journal every day. I take an investigative view when I invest. And so it's a story about a crime that was committed by two criminals and no one understood why. So Truman hung out with these guys and basically got the whole story and then wrote it. And this is a sad story, but it's a very cool book and it's something that sometimes people read in high school, like the American curriculum.
The Pulak Prasad book is absolutely refreshing in the value investing world. I highly recommend it to everyone.
It's something new. It's not the same old.
What does success mean to you?
I want to achieve all kinds of benchmarks on my business, on returns, and things like that. But in terms of success in life, it's being able to do work you really care about. I'm lucky to be able to do that. Having the freedom to live a balanced life that's professional and personal. But I also think just having people around you who support you and love you. That doesn't get much deeper than that. If you get too fixated on the chase or the crazy ambition, you can lose sight of what's actually important. But I basically try to live as healthy of a life, like mentally and physically, so I can be the best investor I can be. But really, I'm trying to be the best human.
Monsoon, that's a great place to close the conversation. Thanks for being on the show. That was my conversation with Monsoon Pabrai. A few ideas from this conversation really stand out. First, environment shapes thinking. Growing up around investors like Munish Pabrai, Warren Buffett, Charlie Munger, and Lilu meant Monsoon learned to look at businesses through a long-term lens very early. Second, discipline compounds. The structure her mother built during Monsoon's teenage years became the foundation for running her own fund and managing investors' capital. And third, integrity is an edge. When Monsoon started her fund at 25, her promise to investors was simple: be transparent, be honest, and think long term. Her story is a reminder that great careers often start small, with curiosity, a few believers, and the courage to begin before everything feels certain. If you enjoyed this episode, subscribe to the show wherever you're listening to it and share it with someone who might find it valuable. For any comments and recommendations, you can drop me a line at pritish@1%.live. Until next time.